Good evening and welcome to the FITT Show, financial information for today and tomorrow. I'm Bobby P. Kinzer,
And I'm Thomas Doty.
and we are the FITT Show, helping our people get their finances in shape. Welcome to people in America and around the world to the most prolific and empowering show on the airwaves today. Yes, I'm biased, but nobody can even question it because we are trying to provide you with information that can help you increase your wealth and develop generational wealth. We are the FITT Show. So make sure you go out there and search us. Share us on YouTube and actually go out and hit that like button and that heart button. And also, if you have any comments, please make sure you go out there and put those in the comment box because that helps us get traction to the people and it allows us to reach more people. The more comments and likes you give us, the better we are off. Our disclosure statement is we do not sell any products and we do not promote any specific products. Now, we'll speak in general, like, mutual funds and bonds or treasury bonds. But other than that, we will not be giving specific um, um, stocks. Now we do show the stock market. We do show just to show Dote's portfolio and what we track and what it looks like. But we're not recommending because we're not financial advisors. We're not registered brokers. We do not have fiduciary responsibility license. So we are financial educators. Just want to make that clear. Starting off out straight out the box. How you doing today, Dope?
Man, I am happy to be alive.
Man, it is good to be alive. It beats the alternative, that's for sure. But one guy told me, said, the worst thing you can do is just wake up and you were dead. I mean, that's just not a good alternative. So look, hey, so look, it's so much. Let me tell you, it's so much going on out there today. With the stock market, with politics, with relationships, with everything. So much going on, and it's hard for people to focus on their finances. And one of the things about our show, we trying to get people to hone in because we understand people only know what they know. So we're trying to provide you. So if you have any questions, please put them in the comment box. Questions about things that we talked about on the current show and things that may not be. If it's we can spend some time on it, we will. If not, we'll get back to you. And just want to remind you to share our site on Facebook Live. Go out there, make sure you share it, and make sure you subscribe on YouTube. So with that, Dope, let's get into our main topic at the top of every show is the stock market update.
Yes, Mr. Kinzer. It's been a very tumultuous week in the market. And a lot of ups and downs. And a lot of things went good, some things not so good. But you can see the Dow actually is slightly down. It had 3 bad days in a row, and today it actually had a pretty nice gain. See, Nasdaq's up past the 15,000 threshold, up about 0.6, and the big players in there had a pretty good week. Microsoft's up $9 for the week. Tesla still having a tough time. We talked about them last week. How Hertz is getting out of the EV market. They're selling a bunch of cars and worried about the maintenance costs and the fact that they aren't holding their value because Hertz keeps the cars for a couple of years and then sells them off. But with all the price cuts Tesla has been having, that's really put a dent in the resale value. And the maintenance cost is a little bit high, which is kind of surprising. And a lot of that's tires and brakes because of the heaviness of the vehicle because of the battery. Apple had a good week. It's up 3 points. It had several bad days in a row, but Bank of America just upgraded it. they're expecting it to have a pretty good year in 2024. So it shows that my Pfizer is staying stagnant. And my favorite stock in the world, NVIDIA, had another fantastic week. It's up 23 points or 4%. And it just continues to roll. And the analysts continue to make increase the what do you call it? The target price. It keeps going up, all driven by the AI and the fact they make the chips that a lot of companies use. So, pretty good week. Still interest rates worries. That's what kind of beat the market up earlier this week. And I think the fact that the budget deal has been put off till March kind of took a little pressure off. So continue to hang in.
Well, that's good news, I guess, for all of y'all people who are in it for the long play. Um, that's good news, and all speculation going forward is they're talking about especially the Nasdaq, that they're looking forward to do good things. But let's talk about cryptocurrency. Last week we talked about safeguarding your money, and this week actually our topic is going to be about understanding cryptocurrency. And a lot of people know some about it. Some people are even into the cryptocurrency market and really don't understand it. So today we want to try to give you a better understanding. Not that we encourage you to go into cryptocurrency, but as we always say on this show, we want to provide you with knowledge. So anything that you do decide to invest in or partake in, at least understand it. But the cryptocurrency market is actually is down by 8%. The total market is down by 150 billion. It went from 1.8 trillion to 1.7. And the Bitcoin itself, compared to last week, it's down by $5,000. That's 11%. And we're going to talk about that because, why does cryptocurrency move so up and down? Why is it so speculative? And we're going to give you better information so that you can help you to understand if you want to make a decision to partake. But that's a big drop. But compared to 2021, it was like $16,000 a Bitcoin. Now it's $41,185 per Bitcoin. Then you have Ethereum, which they call smart contracts, which has supposed to have a little bit better structure than all the other cryptocurrencies to make it a little bit more structured. And that's down by $158, about 6%. Then Tether, which is a stable coin, another type of cryptocurrency, was supposed to be like what they call it, a stable coin. It's usually pegged, and Tether is pegged to the dollar. So they say. We'll talk about that in future conversations too. And we've been tracking Solana. We were tracking Shiba Inu, but it has dropped off so bad, that meme cryptocurrency coin, that we just dropped and was following Solana. Now, Solana had been going up since we were tracking, I think from 40, maybe $45, and went all the way up to like $105. And as you can see, the past 2 weeks, it's been dropping. Now down to $94 a share. It's like down $6 a coin, about 6% for last week. And then the Dogecoin, which Elon Musk, Mark Cuban was pushing, it's just been holding at the number 11 position. So that's the cryptocurrency market, and we definitely we're going to get into talking more about the cryptocurrency market cryptocurrency in general, because a lot of people just don't understand though what actually cryptocurrency is. And the reason why we're going to talk about it on the show today is because, and I know some of you older people who are risk adverse, they're like, oh, what I need to know about cryptocurrency. You need to know because even your kids, your grandkids, people are talking about it. And it is a viable investment in the future because it's allowing the little guy to be able to play in there with the big dog. So let's start off.
Hey, Bob, before we start, let's share some of our discussion about this topic and how. And I mean, it just to make the point, we're definitely not recommending that anybody run out and buy crypto. We don't. Bob said earlier, we're not recommending anything. We talk about what we do, but what we do fits our particular situation, and everybody's situation is unique. But Bob was hesitant to talk about this topic because he says, well, we need to spend more time just going over basic stuff. This is kind of out there. This is something that's really unusual and not for the average investor. And it truly isn't. But just the fact that it's in the news so much, it's so popular right now. And our goal is to educate, and we want to make sure everybody has a decent understanding of what cryptocurrency is, how it works. And again, we aren't recommending anything. We have no dogs in this race. We aren't pushing anything. Our goal is to educate, and we feel you should know about cryptocurrency, how it works. And if you decide it fits your particular situation, that's totally up to you. But I just want to reiterate, we definitely are not recommending anyone run out and buy cryptocurrency.
And Dote, I'm glad you started off this way because me and Dote had a heated conversation about it because, and y'all, if you've been watching the show, y'all can sort of tell me and Dote's investment temperament. I'm conservative, and Dote is, can I say aggressive, Dote?
Yeah.
Yeah. And so that's what makes us good, because we bounce off each other. But we had a heat because my issue was, let me go with my issue, then I'll talk about those. My issue was, especially Black people, and this goes out to all kinds of people our show, by the way, but especially Black people are so risk adverse that my contingency was that we got to get Black people just to understand, invest in the basics, in the stock market, which is like medium risk type stuff. And I feel they're not even there yet. But Dote's contention was, but people need to know about this because it's definitely a viable investment option. And just like any all the other ones out there, they all say past performances are no indication of future performance, right? So past return, yes, no indication. So they all are speculative. It's just that some are more speculative than others. Some are low, some are high, some are very high, and some are very low. But so he convinced me that we need to talk about, because our show is about educating and we leave this so you can make the decision of what you want to do. If it fits your temperament, it fits your financial goals, it fits your financial portfolio, then go for it, but it's incredible because I know personally people who made a lot of money because they got in early from it. But it's just like, what's so interesting about cryptocurrency though, compared to gambling? And it's weird because in gambling, all my friends who go to MGM Grand here and in Maryland and Casino Live, they never tell you about what they lose, right? They always tell you about, oh man, I won, but they never tell you what they lost, which, sort of, you got to balance it out to get your real earnings. But with cryptocurrency, I never hear the people talking about the money that people made. I hear always people coming back with, "No, man, this is losing money." It's so it's weird that it's the opposite with people. But I know several people who've made money. So
yeah, Bob, and the key thing you guys should get out of this, because there is no right answer.
Right.
What Bob does works for him. What I do works for me, and we complement each other. Bob knows about a lot of things I don't know about. I know about a lot of things he doesn't know about. And so we bounce ideas off each other, and we always end up on the same page because, again, our goal is just to educate. But there is no right answer. You have to figure out what's right for you. And so don't ever make a mistake and say, well, I want to do the way Bob does it. Because what Bob does fits his particular situation. And you'd have to go through his whole financial story and his biases and his history and what he's been through and what he's made money on, what he's lost money on, to understand why he does what he does. And the same with me. You'd have to understand my situation, what money I might have to lose, what money I may need in the future. And it's way too complicated for anyone to say, I want to do what somebody else does. The goal is to understand what your own thoughts are, but be knowledgeable. And that's where we're trying to help, is to educate on certain topics. We find articles that we think we'd like to share with folks, and that's how we work, and we try to share it with you. So just make sure you understand, it's not trying to do what we do or trying to do what he does or what anybody does, because nobody's situation is like your own situation. But the most important thing is to educate yourself.
And the human nature thing is dope. The human nature thing is for people to take the easy way out. Okay, tell us, dope. Give me advice, Bob. No, it's because it doesn't work. So some people say, well, what good is the show? What good is the show is we're providing you with the information, because people don't know what they don't know. So the value in our show is we're not trying to lead you one way or the other. Although I must give a disclaimer that despite where we are on the risk tolerance, we both are proponents of the stock market in general. So I want to give that disclosure and disclaimer, because we've seen that over time that if you want to build wealth, one of the ways to do it is through the stock market. So I give that disclaimer, but we're not going to tell you any particular stocks to get into, any particular funds, any particular financial institutions. We will not do that. But there's so many good ones out there, you all. So we hope you take that, leading into this, because it's so important to understand that. And last, though, before we get into it, the point about people want to take the easy way out. Don't give me a stock, though. No, we said this before. Building wealth takes work, and if you just take a little time and put a little time in, you will benefit from it. That's why I can understand how people spend like a whole year planning their vacation, but they don't take 2 hours to plan their finances. They take 2 years to plan a vacation, but they don't take 1 hour to plan their finances. So with that, though, I hope y'all
I wanted to get that out. Just
I know, because it's real, though. It's real, and there's so many barriers to our culture of why because most people think that most people are rich is because inheritance. That is not true. That is not true. I mean, if anything's a myth about money, that is a myth. Now, there are people that do make money, but most of the people have not made money from inheritance. Most people have made money through investing and through having a business and growing their money. So with that, dope, let's get into cryptocurrency. And I'm telling you, if y'all got some questions, this is the time for y'all to put comments in the box, because that's how we make this interactive, by you being able to put things in the comment box. And then if you got an opinion on what we're talking about, put it out there. Let's share it.
Okay, let's get going. And we're going to talk about crypto. And a year ago, crypto was crazy. It had gone down. You had a lot of people doing the I told you this wasn't no good. It was down in the 20,000, 20, 21,000. And then it kind of went crazy. Price has more than doubled. It's up over 44,000. It's gone as high as 44,000 this year. Now it's down a little bit, but still it's going strong. And the even the money in other cryptos. Well, I'm sorry, I was talking about Bitcoin when I said it's more than double, but a lot of the cryptocurrencies have seen huge increases in their total market value. So everybody's getting into cryptos. And I'll give you my reasons why I invested in crypto, because I like the idea of the fact that you shouldn't have to pay somebody to pay somebody. It's a situation where it just makes sense to me. And so the fact that crypto has done so well now, people expect it to do well in 24, no guarantee that it will. And Investors are optimistic. People think it's going to have wider acceptance, and you hopefully we'll get some regulatory clarity from Washington because it's such a new phenomenon. Even though it's been around for a while, they still haven't decided how it's going to be regulated other than the tax situation. And so what you see now is that some of the big brokerage firms, Fidelity, for example, has just created these electronic trading products, ETPs, which if you think of stocks, ETFs, where there are pools of stocks and they might be of a particular sector of the whole stock market, you can now buy ETPs or electronic traded products just for cryptocurrency. Now, in the case of Fidelity, they only do it for Bitcoin and Ethereum, which are the two largest or most well-known cryptos. But it's getting more exposure, it's getting more popularity, and it's something that's out there that we feel you ought to know about.
Yeah. So, what is cryptocurrency? Well, no, before you go into that, I want to make a comment too, though, because many crypto analysts think that cryptocurrencies are notable for two main reasons. First, they typically be transferred without using a third party. See, that's what Dope was talking about. That's the interesting thing about crypto. It cuts out the middleman. They call it peer-to-peer payment platforms. It's like you don't have to use a bank. In contrast, peer-to-peer payment, it takes out like the Visa person. It takes out the MasterCard. It takes those people out. And like the peer-to-peer payment platforms like Venmo, PayPal, and even Zelle, that requires connections to a bank account to run, even a Cash App, right? Now, second, they are designed to be decentralized, right? Meaning they're generally not backed, controlled, or owned by any government, central bank, or corporation. Instead, decentralized cryptocurrencies operate according to a computer software that anyone with an internet access can download and use to monitor and verify the transactions. We're going to get more deeper into that so you can understand what does that mean, decentralized versus the central banks. Now, the US dollar, on the other hand, is backed, regulated by the US Federal Reserve. A lot of people don't even know this, though, when I've been working for the FDIC. A lot of people don't even realize that the United States Treasury, they print the money, but they do not decide how much money is put into the system. You know who decides the money that is put into the system? Who makes the monetary policy? The Federal Reserve, the central bank. That's why some people think, and that's why cryptocurrency was created to go against the dollar, because the dollar was losing value. And they just print. And that's why people say, we shouldn't have to worry, because as long as we got the Federal Reserve, like when we're going through those trying times to 2008, they are just printing more money. Now, to help you understand about cryptocurrency, let's just start with the name cryptic name, crypto. This refers to the software codes that protect or encrypt cryptocurrency networks, allowing them to offer secure transactions and maintain decentralization. We're going to go deeper into that. Now, some crypto values are based on supply and demand, meaning the prices are determined by how much others want to use or own a given coin. Basically, they call it consumer sentiment. And that's why it has so much fluctuation, and so because it's not backed by anything, but the supply of crypto and how useful people expect it to be depends on the future, because they want to make it like a currency that you can trade. For instance, in the future, crypto, will be able to buy a lot of things like the US dollar and euros did. Now, at one point, though, I don't think people even knew this. Businesses was accepting, 19% of businesses was accepting cryptocurrency as a way to make payments. But that's been fluctuating. But that's the goal of cryptocurrency, to make it, like you go to the store, you go to Starbucks and purchase. But because cryptocurrency is becoming more well known, it doesn't mean it's well understood. And that's why in today's show about the basics of cryptocurrency.
And let's start. Okay, what is cryptocurrency? Okay, it's a digital asset designed to work as a medium of exchange where an individual coin ownership records are stored in a ledger, which is called a blockchain, and it exists in the form of a computerized database using strong cryptography to secure transaction records. It controls the creation of additional coins and it verifies the transfer of coin ownership.
So with that definition, people would think, they would say, well, wait a minute. If I look at banks, right, which is not backed by gold anymore, by stuff from Fort Knox, what's the difference between cryptocurrency, a digital currency, and a digital dollar, which our money is represented by a bit and a byte in a computer at a bank? And this is the difference. Crypto is not backed by anything. The dollar is backed by the mortgages, the personal loans, the car loans. It's backed by people making payments. That's what gives the dollar value. But let's get into the blockchain, right? That's the main point of cryptocurrency. They created this blockchain, and the validity of each cryptocurrency coin is provided by a blockchain. Now, blockchain is a continuously growing list of records called blocks, which they are linked and secured. Now, blockchain is simply, a database that is in cyberspace or online. It's just a database. It's like a spreadsheet, that you might use at work or home. However, this database, or like a ledger in the blockchain terms, is decentralized and is distributed instead of the data being stored in one place on a computer or a server maintained by one person or company. A network of unrelated computers known as nodes each maintain their own copy of the ledger. And we're going to explain this a little bit further. But the fact that copies are not centralized helps protect the reliability of the data. Someone would have to corrupt multiple copies of the ledger to deceive the whole network. That's what makes this a little bit more secure.
Okay, let's talk about how the blockchain works. If it's getting too complicated for you, just send us a note, let us know, and we'll try to break it down even further. But let's think about the name, blockchain. So a block, that's just a way of storing data, such as a transaction data. They typically contain multiple data points. Think more than one transaction. So once a block is filled with all the data it can hold, it's added to the chain of all the blocks of data that came before it. So you got this block of data and these chains with the other blocks. And so they're designed to become unalterable once they're locked into place in the chain. So nobody can mess with it. So this allows anyone running the blockchain software to trace the history of a piece of data from the blockchain's launch to the present. And so not just anyone can add data to the blockchain. This ability is limited to the individuals and companies running blockchain software on computer nodes. So they must often update the blockchain by expending computer and electricity resources to solve mathematical problems in a system, and that system is called proof of work, or by putting forward a small amount of cryptocurrency that they will forfeit if they approve false transactions. And that's called the proof of stake. So these are called consensus mechanisms, processes, by which the participants in the blockchain network form an agreement on whether transactions are valid. So in theory, blockchain systems are kept secure because a hacker would have to put forth more computing power than the majority of the network, and this would be very difficult to do. And they risk losing some of their own crypto holdings if they approve fake transactions or control at least 51% of the nodes to force all nodes to update the overall blockchain with the fake data. So blockchains are active 24/7, 365. They never shut down, and that's how they work.
And so I know that was a lot of information, but it's to narrow it down, that this information on this block, which remember, blockchain, just think database, just think cyber database. a spreadsheet out there in cyber world that they keep this. And the thing is, because the advantage of this blockchain is decentralized, meaning the Federal Reserve is the central banking, right? They control everything. They control the monetary policy. They control how much money is going to be printed, and they control what? The interest rates, right? So, but this is decentralized. And remember, you all, the whole point of creating a cryptocurrency was to go against the dollar, or what they call fiat. Fiat currency is whatever country government makes that currency, their currency is called fiat. So ours is the dollar, but the central banks control it. And as you notice, in the past few years, man, the Federal Reserve has just been printing money. And the more money you print, the more the value of the dollar goes down. So that's why the cryptocurrency was created. And it cuts out the middle man, like Visa, right? Like, any other transaction that you make that has to go through, it has to be approved by, a card holder, a bank. This is straight peer-to-peer. You directly go to the person who has the merchandise. So it's called decentralized. Now, because these ledgers are decentralized and they're distributed across locations, the blockchain is theoretically, check this out, this is the key, you all, harder to tamper with than similar records held by a centralized source. It will be easier for a hacker to alter financial information held in one bank's centralized database, for example, than it would be for them to hack into a majority of decentralized and distributed blockchains, right? Okay, what this does, when you have just one centralized blockchain, it can create forgery, right? And that's why, like with the dollar, the dollar be out there, so many ways that you could print more dollars. And that's also the advantage of cryptocurrency. You cannot print more dollars or the cryptocurrency unless you have the power, the computer power to do it. Now, it's important to note here that simply having something distributed, meaning more than one location, it isn't the same as being truly decentralized, meaning decentralized only when all participants has equal rights within the rules of the system, which you do not have with the central bank and authorities, administrators, right? You have no control over what the Federal Reserve does. So in other words, the system will be decentralized when you as an individual have the same right to update a log of transactions as a bank or a company does. That's why cryptocurrency is so important, you all, because if you hold it yourself in, like, say, a cold wallet we're talking about, it's like you're your own bank. You control your own money. And that's one of the features of cryptocurrency. You are acting like the bank. And this helps you ensure the blockchain systems are able to continue running even after people or organizations or companies that are long gone.
Yeah, that's a pretty good summary of why blockchain works. And that decentralization, which is total opposite of what our bank system is set up. And the thing that might be a little tricky or hard to understand with this whole blockchain, it's decentralized and distributed across many nodes in different locations. So it's harder to tamper with, as Bob said, than records held in a centralized source. And so it'd be almost impossible for a hacker to be able to come in and get into all of the different databases that are decentralized. And so simply having something distributed in more than one location isn't the same as being totally or truly decentralized. So as Bob said, it becomes decentralized when everybody has the same right to go in and do what it is they want to do. And that's the big advantage of blockchain. That's why it can be effective and hopefully will be effective in the future.
And Garnett Nichols says, so they are safe. Let's make this clear, Garnett. There's nothing just considered safe. That's a a very open statement: is it safe? It's and you know, with every security measure you go for, there's always somebody that comes with a way to beat the system. But yeah, that's supposed to be making this a lot um, safer, if that's the right word. Um, is it's supposed to give you, protect you against fraud and what they call it being immutable, that somebody can go in there and change it, right? So the disadvantages of the blockchain, is that what you just talked about, though?
No, that's on you.
Yeah, because I sort of jumped in front of. So, like, concern now, the disadvantage about the blockchain is concerns over energy usage. Now, this is so important. The interesting, though, they rely on computer networks, and some require extensive. Not some, but most of them. Well, they're trying to get away from this, but extensive computer resources, computing resources. Certain blockchain systems can require a lot of energy. Most of these databases, most of these computers, though, it takes so much power, because what it is a formula, you all, that is so complex, so big, that these computers, and a lot of the computers that run this cryptocurrency, they are in cold places like Greenland, Iceland. That's how much computer energy it takes. And that's why it's so hard for people to go in there and try to mess with the blockchain, because you would have to have a computer that is so super, super, super duper charged to be able to do it. So that's one of the things that does make it a little safer than just, having a dollar bill in your pocket and somebody just can take and forge it and make more dollars, right? But in 1921, the blockchain required to run the Bitcoin network was like 0.55% of the world's electricity production, though it estimated between about 73% of that came from hydroelectricity and wind. So that's why they're getting around from this computer energy and going to ways where it doesn't take as much energy to generate these cryptocurrencies, y'all. Now, the blockchain technologies continue to grow and develop. People and companies and governments must determine whether the value and benefits of energy intensive blockchains outweigh the potential energy consumption. So a lot of the green people who, for the environment, are really sort of against cryptocurrency, because these computers that generate so much energy, it creates so much heat. They are saying that it can affect the climate, the solar system, and things like that. But remember, the thing to make cryptocurrency is very difficult to change. It's very difficult to counterfeit and to commit fraud, and that's what they call it's immutable.
Okay, because it's so new, regulations haven't caught up with where it is right now, and governments around the world are starting trying to figure out how to treat them, how to handle them, how to regulate them. And so, depending on where you live in the U.S., for instance, you may not be able to invest using the same crypto exchange as somebody in a different country. On a larger scale, this uncertainty presents risk to those looking to buy or invest in blockchain technology or cryptocurrencies. So certain blockchain applications may be outlawed by certain governments, or they may be taxed in a way that impede their long-term growth. And so because it's so highly volatile, it might be more susceptible to market manipulation than securities. So crypto holders do not benefit from the same regulatory protections applicable to securities, and the future regulatory environment for crypto is uncertain. So it's also not insured by the FDIC, which may give you cause to pause also, or the Security Investor Protection Corporation, SIPC, meaning you should only buy crypto with an amount you're willing to lose and from a company that you trust.
Hey, I want to put this out there because James Alexander put a comment. He said, the point of confusion, quite possibly, question marks, what is the tangibility backing cryptocurrency or the stock market? The tangibility of betting on a sporting event is there is there the actual event? Do you understand what he's saying there, Dope?
Not sure I do.
I think he's saying like back to what we're saying, how cryptocurrency is not backed by anything. What's the
Oh, right.
tangibility of it? What's the
It's not.
right? And he's saying, the point is, back in crypto or the stock market, and I guess that's a rhetorical question. Like, the stock market is sort of the same way, right? There's no guarantees of what it's going to be, but at least the stock market is backed by companies that actually have products that they're actually selling.
Exactly.
That's the difference, and it comes down to the usability of cryptocurrency. And that's why, and I truly believe in the future, it may become an exchange for currency to buy things and businesses. Because we're starting in certain countries, though, like Ecuador and Argentina, they're using cryptocurrency as another. But when you look at it, look at their fiat currency in those countries. It's so devalued. That's why people are going to cryptocurrency in those countries, because it just has more usability and it cuts out the middleman. So, but I hope that, I see what you're saying, James. What is the tangibility of it? What is the substance of it? And it's like you said, it's no different than the stock market. And so then it's no different than a sporting event, right? That's so intangible. So, I
It's
mean,
definitely intangible. There's nothing you can grab and touch.
yeah,
Sure.
yeah. But now, stable coins, right? Like Tether, which is supposed to be back dollar for dollar for the cryptocurrency, they're finding out that those stable coins that are pegging to the dollar, some of them are not all the way pegging to the dollar. Some of it is half dollars and some of it has assets. So you got to be careful on those stable coins. But so stick with us. Know if anybody got any questions, like say, raise your hand and say, hey, why are y'all telling us about this? And we're going to talk about cryptocurrency as investment, but we just want you to understand the basics of it. So if you decide, to get involved with this, and then you have better information. So stick with us. Now, what is a crypto wallet? Now, this is important because this is where people hold their cryptocurrency. It's almost so when you hear crypto wallet, just think of electronic wallet, like the wallet in your pocket. Now, crypto wallet is a device or program needed to access your crypto. Now, there are different types of crypto wallets, such as online accounts and physical paper wallets with different levels of security and accessibility. Now, cryptocurrency wallet stores the public and private keys or addresses which can be used to receive or spend in cryptocurrency. And I know you probably heard of people when you say keys, private keys, these are like passwords. And there's people that have lost their password. And once you lose your password in cryptocurrency, it is gone. Because remember, the people, unless you go and don't get ready to talk about a cold versus a hot wallet, unless if you hold it in a cold wallet, they don't have your money. You have the cryptocurrency, you know, and cryptocurrency private keys can be permanently lost from a local storage due to malware, data loss, or destruction of a physical media. There was a guy though that had he ended up creating. He made $20 million in cryptocurrency, and he kept it in a cold wallet on his computer, and he forgot. He got a new computer and threw away the computer. And once he realized what happened, remember, if it's in a cold wallet, it's on that computer. No one else have access. That's the beauty. So he tried to go to the landmine and find the dope. It was done, So but the good thing about it, by having a wallet, it prevents the currency from being spent or resulting in an ineffective removal from the markets. Now, unlike traditional wallets, crypto wallets don't technically store your crypto, they store your private key. The private key is like a randomized password that gives you access to your crypto. They are automatically generated when you purchase crypto. Your specific password is specific to you, as are wallet addresses, which are like usernames.
Okay, and Bob, let's explain what those two wallets are again. There's two types. There's a hot wallet, and that simply means it's connected directly to the internet, like a desktop, mobile, or web wallet. And they're generally easy to use, conveniently accessible, since all crypto transactions happen online, but they can also be more vulnerable to hackers. Then you have a cold wallet. They're offline devices. Could be a piece of paper, a USB drive, could be in your brokerage account at Fidelity. And the only way to access or to interact with crypto is through the internet. So these are considered more secure because they aren't on the internet, but they also could be inconvenient as well as lost or stolen. And the thing about having, let's say you buy some crypto through Fidelity, well, you have to go through a step to make that transaction, as opposed to if you have a hot wallet and you can make that transaction directly. If you have a cold wallet, like in Fidelity or something like that, there's another step you have to make a transaction, to buy or sell. And the way the volatility of it, you may miss out on buying or selling because of the time it takes you to make that transaction. So someone who's actively involved in buying and selling crypto would probably only deal in a hot wallet. But the safer, more secure way is to have a cold wallet, but you lose some flexibility.
And Doe, our good friend Rodney Madison Sr., who is involved with mortgage notes, it's almost the same thing. Mortgage notes, it's the same thing as taking the banker out and you're holding the mortgage, and that's how it is with cryptocurrency. You're holding your own currency. You are the banker. Now there was some confusion though, because some people ask me, "Wait a minute, man, what?" I thought banks are not into cryptocurrency, right? And back to the regulation point, the SEC has not regulated cryptocurrency, and that kind of makes me think too, though. Now, as big as much as cryptocurrency, why is the SEC not regulating cryptocurrencies? So that means somebody making a lot of money. But a lot of people ask me, Bob, I thought banks are not involved in cryptocurrency, but they are when it comes to custodianship. Now, you could choose to manage your own custody, what they call self-custody, using either a hot wallet or cold wallet described above, or you can use a third party. Now, non-custodial wallets, those are preferred complete control over their private key, remember their password and or address, and immediate access to those coins can provide their own custody. There's more commonly used by advanced crypto users, and it's challenging to learn to maintain. Now, custodial wallets, when using a third-party custodian, like Dope said before, like Fidelity or a bank, they store your private key for you and manage security. And they are more common with users for preferred convenience. It doesn't mean they sell cryptocurrencies, but they are custodians. They'll hold it for you. And that's why some people got confused though when they said, Bob, I thought banks wasn't into cryptocurrency. And by the way, they've been studying cryptocurrency for the past few years, and a lot of banks are looking to get into cryptocurrency. But that's how banks are involved. It's called custodialship. There's non-custodial wallets and custodial wallets.
And the bottom line for which type of wallet you want to use, buying crypto, that's a huge decision. And before deciding which wallet or custodianship is right for you, you got to ask yourself some questions. First question is, am I more concerned with having complete control of my coins, or do I want convenient access to my coins? Next question is, what are my goals? Will I primarily buy and hold, or will I make trades all the time with, need instant access? Number three is, how much time do I have to dedicate to securing my private key? Or is there a customer service department available for support if I need it? So there's no right or wrong way to store crypto. Risk and benefits with each particular situation, whether it's a hot wallet or a cold wallet. and third party and self custodianship. So research your own options. Look at what you plan to do, how you plan to work, what your goals are, and make the best decision for you and your particular situation.
Though, let's talk about the risk real quick. The cryptocurrencies have been compared to Ponzi schemes, pyramid schemes, even economic bubbles, such as the housing market bubbles. But digital currencies were nothing but an unfound fad, or perhaps even a pyramid scheme based on the willingness to ascribe value to something that has little or none beyond what the people pay for it. Now, that's the risk in cryptocurrencies. It's not backed by anything, but they're trying to make it a currency of exchange. Now, cryptocurrencies exist only with the faith of those using them, and their value is not derived from an underlying asset. They are unregulated. Cryptocurrencies are currently unregulated by both the government and central banks. They are volatile. Unexpected changes in the sentiment can lead to sharp and sudden move in the price, not uncommon for the value, as we can see, dropped over a day by thousands of dollars, sometimes hundreds of thousands. The cryptocurrency issue is not registered with the SEC, Securities Exchange Commission, and the SEC, though, has not said if cryptocurrency is good or bad. However, they did say it's highly speculative.
That's for sure. Now, you got to understand the tax implications of crypto if you decide to buy, because you always got to pay on the sound. So the IRS has decided that Bitcoin and cryptos will be treated as property for tax purposes, and that means they're subject to capital gains tax if you sell it, and sell it for more than you bought it. And so the IRS send letters to cryptocurrency owners wanting them to amend their returns and pay taxes. Is a question on the taxes. Did you buy or sell cryptocurrency? That's because the IRS wants to get their cut. So it's considered a form of money, but it's also considered a financial asset or property. And so with any other investments, when you sell it at a profit, you gotta pay tax on it. And so they just decided that they're going to require taxpayers report any cryptocurrency transactions of 10,000 or more to the IRS. So again, they can get their cut. And so you got to report any transactions involving crypto, even if you don't have a $10,000 profit. So any transaction you make needs to be reported on your income taxes. And so if it's increased in value, just know you're going to have to pay tax on it. Prepare for it. Don't get caught short by the IRS. You do not want to get in trouble with them.
And no, a lot of young people that got involved with cryptocurrency didn't understand every time you get in and get out, you create a tax implication with cryptocurrency.
Yes, you do.
And if you don't keep track of that, and that's why on the 1040, up on the first question, it asks you, do you have cryptocurrency? Yes or no? And guess what? If you say no and you have cryptocurrency, you're creating a federal crime. So be aware of that. Now, though, we've talked about the basic understanding. I know we've gave more people more information than they probably feel they need to know. But let's talk about cryptocurrency as an investment. It's imperative that you understand the real investment potential of cryptocurrency. Prices have been rising for the most popular and well-known cryptos like the Bitcoin and Ethereum and Solana. Those are the top, within the top 10. The most popular and well-known cryptocurrency. But it doesn't mean getting into crypto market is the best investment for you. Decide whether investment in cryptocurrency should you realize you should realize, that you could lose money, and you should be careful about committing more money than you can afford. Now, it can be very attractive to say that you could make big bucks investing in Bitcoins because, once again, I know people that have. But it's also imperative to note that new asset classes like cryptocurrency can, experience major volatility. But reason why we're talking to you about it, you all, because it is a viable investment. And if you have everything else in place in your portfolio, then cryptocurrency could possibly be a mix to put into your portfolio. But remember, you got to be using money that you can afford to lose.
Yeah, and just to close the loop, as far as how it's more accessible now, is you can buy Bitcoin ETPs, and that's the first exchange traded products that tracks the price of Bitcoin by holding actual Bitcoin as their underlying assets. Just like if you had an ETF of a sector of let's call it tech stocks, and so that particular ETF would be a group of tech stocks, and the ETF would follow how those tech stocks are doing. Well, now you have that with Bitcoin. And so that's making it accessible to everybody. You can put it in your IRA. You can have it in a brokerage account. You can, buy it through big brokerage firms. And so it doesn't give you direct ownership, but you still have an investment, and your investment is going to track how Bitcoin is doing overall. So you can quickly enter the crypto market without necessarily learning the technical details. You don't have to worry about what type of wallet you have, because your brokerage company is going to hold that for you. And so you can't use it to pay for goods and services, which is the actual intent of Bitcoin.
Right.
Because again, you have that intermediate step of having it in a custodianship in a brokerage firm. But you do have access to it. You can take part in the gains and losses and follow it, how it does. And as it goes up, if you have that investment, your investment would also go up.
Just want to make another key point with now that these brokerage firms the SEC just passed the ruling that you can have ETF, electronic traded product, like electronic traded funds, so that's, a pool of cryptocurrency. But this is the interesting thing about that, though, being in a ETP, you really don't own the cryptocurrency that's in there. So you can hold cryptocurrency and not actually own the specific outright out cryptocurrency, like having the key to that cryptocurrency where you own it on your own wallet. That's the other beauty of the ETP. It's in that particular asset. So you don't actually physically own the cryptocurrency, but you can make money off it. So that's a little bit going to be attractive for people, and it's more available for people to access it. Another thing, though, one last term I want to talk to people: when you get into cryptocurrency, there's different platforms, right? And every platform is not treated equal. Some platforms you can get into it with dollars, but you can't get dollars out of it. So you got to be careful what platform you use. Like Cash App, you can, Robinhood, but there's other Ripple, but there's other cryptocurrencies, and there's over 10,000 cryptocurrencies out there, you all, 10,000 active cryptocurrencies. So, be aware, because every cryptocurrency is not created equal. And like I say, just because you can get in with dollars, don't mean you get out. So it's so important that you have an exit strategy also, because if things are tanking, you got to be able to get out quick. And some platforms, man, you can't even exchange it for dollars. You got to go through a Japanese platform or Argentina platform, or 3 different platforms, and each platform charges you money. And remember, each platform you go through, there's a tax implication. So be careful. It's a viable investment, just as any other security out there. It's just that it's highly speculative, and you can't make money on it. It has its place, but we hope we were able to give you, at least, understanding, because you've been hearing all about this. So, though, let's bring this home, man. Let's sum all of this up.
Okay. First point, which we hopefully made very, very clear to you, that accessibility has increased. It's so easy to acquire now. Like I said, you can call your broker, go online. You can buy $1 worth of Bitcoin and track it. Or you can go to Cash App and put X amount of dollars in and actually own Bitcoin. But again, that's not having access to be able to pay for something using Bitcoin. But extreme accessibility. It's all over the place right now.
And you must consider your storage options, like we talked about, hot or cold wallet, or even a custodial, having a custodial holder at a bank or a financial institution. That is very important because your accessibility to it, it depends on your goals. If you're going to be, constantly trading, you might want to keep it in a cold wallet so that you can trade it faster. But 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 really consider the storage options that you have. And remember, if you keep it in a hot wallet, you got control of your own money, just like you are the bank.
Okay, take care of Uncle Sam. You got unique tax implications. Understand what they are. Keep records of when you buy and sell. And make sure you stay straight with Uncle Sam. You don't want to get crisscrossed with him.
No, because Uncle Sam always gets his man. The last one is, like, and we use this in everything that we talk about, especially when it comes about investing. You must understand the risk. There are so many risks involved, and you must think about the volatility. You must, understand that it must be money you can afford to lose. And the biggest one is, though, it's just not for everybody, and that's just the point. And we want to make sure you understand that it's just not for everybody. But
Yeah,
understand the risk, and that's what anything we talk about, you all, even if it's insurance or estate planning, you must understand the risk and what you into. And that's why we wanted to spend some time on this specifically cryptocurrency, because so many people just don't understand, what it was. And we hope we cleared that up for you.
Yeah, and it's a huge unknown right now. There's a lot more not known about it than there is known about it. So if you decide this is for you, make sure you do your research. Make sure you know what you're getting into. Understand that it's extremely volatile. And if you look at, we talked about it being over 4,000 before, dropping down to 20,000, back up to 40,000. Extremely volatile. So you got to have thick skin if this is something that you're interested in.
Yeah. So, just keep that in mind, you all, that it's just so much to know out there. But make sure whatever you're involved in, know what you're getting into, because if you're going to do something, do it right. Take the time to research it. And we hope we provided you with information that you understand cryptocurrency better. And if you don't, then you know what? You don't need to be purchasing it. So with that, we're here next week, same bat channel, the 25th. We look forward to you joining us again. And all you people who didn't put any comments out there, we hope that you understand cryptocurrency better. But let's give our, shout out, as we always do, Rodney L. Madison, the senior, the noteexperience.com, as an alternative investment holding mortgage notes, which is sort of like cryptocurrency. You actually hold a mortgage. You cut the middleman out. You are the one who owns the property. And my good brother, Carl Chapman. Hey, my sister Linda, my sister Gloria, how y'all doing out there today? And I don't see my sister Noli out there. She must be busy. But Gloria and Linda, thank you for joining as usual. Garnett, how you doing, Miss Nickens? And we got a new person. Let me see if I can pronounce their name right. Enola Akinfola Jami. I probably slaughtered that name, but thank you for joining us. And Garnett said that, and our good friend James, keep sending them comments and those videos or messages to me, James. They're really interesting. So with that, thank you, everybody. We hope. Oh, thank you, Neola. Thank you, Neola. Thank you very much for that correction, Neola. Thank you very much. No problem. So look, see you next week, you all. And remember, knowledge is power, but action is even more powerful. Have a good evening. We'll see you next week.